Your problem is you think that we don't get a deal for China. The S&P sells off to 2,800, which would be 5% below its recent highs. And you say she just can't decree these changes. We had Leland Miller saying that it's a rubber stamp. NPC will do what she says. So it could be done in his view, but you don't think it will happen.
Well, okay, there's no doubt that President Xi is a very powerful figure in China politics. But I think the issue here is that what the U.S. is trying to get, and it's an important thing, they're trying to get more protection for intellectual property. That's not something you typically find in a trade agreement. I think in order for intellectual property to be properly protected, it's a legislative matter. It's one party in China, but it's a large party, and maybe they want to keep the NPC a rubber stamp and not have too much controversy on this particular issue. I think the message is from China, we largely agree with you, but it's going to take time for us to get the type of intellectual property protection reformations that you're looking for. So this is the major reason why, unless Trump is going to be more understanding and patient, it's the major reason why I don't expect a deal to be struck this weekend.
All right, so we'd go down maybe to 2,800, which wouldn't be the end of the world, obviously, down 5%. So Mike, check these numbers out. So then he thinks 2,750 to 2,950 range through the summer, exceeding 3,000 at some point. Maybe not until year-end 2019 or early 2020. And then he gives me all of 3,500, Bianco does, 3,500 by the end of 2022. You're not even, you're not a bull. Did you do the math on that? Okay, so that's 3.5 years.
Right.
That's another 20% total. That's like 3% compounded.
Don't forget to add the dividend.
That's
so
like
it's 7%.
Kissing your sister.
6 or 7%,
not compounded. It's not.
Don't forget the 10-year Treasury yield is 2.5%.
You're not giving me anything here. You're just all you're really telling me is that maybe we go up instead of down or stay the same between now and the 3.5 years. But you're not very bullish. That's not. Don't you think it could be far in excess of that or down to 2,500? I mean, give me something.
I'm certainly quite constructive, and the message of those longer-term
4% a year is constructive.
So if it weren't for the trade issue, we'd be talking about a record expansion, no profit recession. I expect the economic expansion to continue for several more years, as well as earnings growth of about 5% to occur for several more years, which is the basis of that price gain, and then add 2%.
I'd stay out of the market if that's all I was getting.
It's not
worth the risk.
Certainly it is when you consider the lower transaction costs of being an equity investor, the lower inflation, which makes these returns higher real returns, not just nominal returns, and then also what's your alternative?
I don't know. Rates go up.
I mean, look, the market, as David knows, the market overshoots, whatever's assessment of fair value all the time. So it could go wherever within that time span. I do think what is interesting about right now, like the 2,800 number in terms of a pullback range, that's what a lot of the technicians are looking at right now in terms of what might get priced in. I think we got this volatility jolt. Certainly the trade issue was the trigger. But what you saw yesterday was you had professional investors, a lot of these sort of systematic funds and things like that said, okay, when volatility perks up like this, we step back. And it was just kind of an across the board, we're trimming back. It didn't seem much more dramatic than that. We're not coming off of a particularly overstretched condition the way we were, let's say, in January of last year.
And I saw that at one point it was something like 90% or almost 90% of all stocks were down. So this was just broad.
Yeah, within about a half hour of the close, it was pretty comprehensive, and that's both good and bad. That both tells you, look, there's real distribution. People are taking a lot of profits here or trying to reduce exposure. On the other hand, on a short-term basis, that means, okay, fine, we got a little bit out of the way.
Bianco, you got all your money in munis. You got 4 years. What can you get in a muni right
Which
now?
is a good asset class.
What can you get in a muni right now? Can you get 2.5?
Yeah, 2.5, 3%.
So that's 5. You got 5% just sitting in munis. Why would you be in the market to get a 4.5, 5% return between now and
you have to subtract inflation from those nominal returns of any bond. But the point is this. I think the equity market still has attractive returns ahead. We're still navigating the market tactically. We're taking a little bit of a tactical, we're taking some tactical
action. Sounds like fair value, you think, right now. You obviously think that we're pretty close. Is the market overvalued or fairly valued?
Last time I saw you, I said fair value for the summer to autumn. It was 2,750 to 2,950 on the S&P. And 2,850 is a level from which we think we can reasonably pivot a few percent for whether the trade issue is looking better, which I thought it was a week ago, to whether it's looking worse. So I do think we can go to 2,800. But the point is, we're not panicking. We're looking to be opportunistic. We're picking our spots. I would point out the communication sector as having very little sensitivity to any of this, the healthcare sector. And there are some areas where we're concerned, industrials and materials as well as semiconductors.
Just holding on to the 50% gains since 2016.
Yeah.
Just holding on to it, I guess, is
50%.
since the November, basically in the NASDAQ.
NASDAQ, okay.
Well, okay.
No, I'm trying to figure out what we're talking about.
40%?
You know, it's a lot.
45?
The gains are significant.
It kills you that. I guess it really hurts you that it did that.
No,
Okay.
I just feel like we're kind of rounding up all the time. I don't know what. But
What's the NASDAQ since the election?
I grant you the NASDAQ 100%.
Okay.
100%.
You'd rather have 47.
No, I wouldn't rather have
47.5.
anything. I'm just trying to figure out where we're going to gauge ourselves.
But it's up a lot. If we could just stay where we are.
Exactly.
That's
the
an
market,
actual.
The market doesn't kind of owe you anything from here. It's performed really well. It's coming off a level that has priced in generously very good profits and a good economic situation. So I don't think that you look at it and say, we're deficient here. On the other hand, we haven't decisively gotten escape velocity above where we were trading in September or in January. So we're kind of consolidating some very strong gains, I think is the way to put it.
Yeah.